Hey traders, Nick here looking at Facebook, but this is more or less about call calendars or any calendar and how to manage an open risk that is winning. So Facebook, I thought that we were getting tight around here, and I said this could happen or a lower high trend that could break. Both did. This was Fang-geddon, the Armageddon day for Fang, where everybody just pooped on it. And it was like a trigger for everybody. It's like, what the heck are you doing? Let's buy this stuff. So, and more importantly, Facebook of late has had some cryptocurrency talks. It looks like they're going for it. And it could be a game changer. So they have over 1 billion users, and most of them are overseas. And that's where the coins happen, more so than in the US. And so I wouldn't want to short it. I am long it. I did share a few opinions on it and several recently, I should say. And right now, if somebody took calls, they're winning. So I have a specific situation. So I chose my last load on Facebook to be long August, 205 calls. I believe it cost me $1.61 to enter. And so I can book it now, and it's a huge win. I think it's 150%. And I could book all of it, some of it, or do something with it, or book half and do something with the rest. So what can I do? Okay, I can lock in profits. What does that mean? A couple of ways I can do this. So let me see here. Let me bring you the options chain. So this is the options chain for Facebook, and this is August. And these are my calls at 205, and they are now $3.80. They cost me $1.60 from memory now. And so what can I do? I can book it, and the difference between the two is pure profit. I can book half and leave half. This would include earnings, or I can lock in some profits. How do I do that? I can do a debit call spread. What does that mean is I can sell a call higher. So instead of booking this, I'll sell something else. I can go up to 215 and still collect more than what I paid. So if I sell this one, I collect $1.91, which is exactly 30 cents more than what I paid. So in essence, I got paid 30 cents to take a bullish bet. So it's a no-lose situation. Even if it goes to zero, I locked in some profits right now because I collected more than what I paid out. The out-of-pocket expense for this risk is a credit into my account. So I made 30 cents per contract regardless. And any credit I get from closing this position, even if Facebook drops, any credit I collect is on top of the 30 cents. Because I collected 30 cents, they can't take that away from me. Because I paid out 160, I took 190, so I'm positive right away. Any additional credit I collect from closing the position, it's an asset. It's a positive position. So it is now 7 minus, where is it? I keep losing it. 7 minus, I'm sorry, hold on for a second. I'm still struggling with being sick, and I need to cough every once in a while. So 3.8 minus $1.90, it's basically, I have an asset that is $1.90 right now, but it should be more if Facebook goes through it. So if Facebook goes through it, it should be $10 wide, yet they're only charging you about $2 for rounding numbers. So if Facebook goes through it, I can still make money, but it has a value now, and I can close that value and collect, and that would be money on top of the 30 cents. So I can lock in profits by selling a call above the one I bought. So if I want to lock in more, I can sell the 205 and collect 260, not $1.90, 270, not $1.90. I can go up to 215 and collect, and this would be a debit of 30 cents. So now I have out-of-pocket risk. If it goes to zero, I lost 30 cents. But the upside is huge. It's now 205 to 215. So these are things I can do. I can sell it to book it. I can sell one higher and still have a credit, a no-lose situation. Or I can sell one even higher to still have some risk, but a really big upside opportunity without having the same old, big risk. So what else can I do? I can turn it, this is August, I can turn it into a calendar, call calendar. How does that work? I'll sell the July call against it. Same one, 205, collect $1.10. So now what does that mean? It means I am short Facebook at 205 through July and long it through August. Earnings is after this. So this will die before earnings. meaning I collected $1.60. I paid out $1.60 to open the August. I'm collecting $1.10 now, so my out-of-pocket expense is about 50 cents. And I need Facebook to meander up to 205, but not higher by July. For the next 30 days, I just want it to stay below 205 or at 205, and then just rip afterwards. Why? Because then it means I got long this for 50 cents. That's what that means. So I can play with the time and go shorter here and pick one, or take the July and go higher. I don't know if there's enough. Let's see, 210. 60 cents, yeah, that's not too shabby. I cut my expenses in half, and that would be called a diagonal because it's 205 that I bought, and I'm selling at 210. So it's not sideways, 205 and 205. That would be a calendar. But when I play the calendar and I go up or down from the one I bought, then it becomes a diagonal. In this case, if Facebook goes to 1 billion, I still make money. In this case, I don't, because I'm long and short about the same place. So I still make money a little bit in real life. But this one, I make a lot more, and it's a lot easier, and it's guaranteed, and I don't have to do anything. They just do it in my account, basically. So these are things I can do for locking in profit on a good bet. And this works on the way down, too. If I buy puts and then suddenly they go down towards my put and it becomes heated, how do I book it? Same deal. I play with the calendar. So the Facebook call, I can lock in profits by doing it a vertical call spread by selling one or two, this one or this one. That would lock in, and I still credit. So I'm paid to be long Facebook. That's really what it says. Or I can choose to sell shorter time to make it into a calendar at the same level, or diagonal at higher level. All right. If you have any questions, let me know. Oh, as far as what Facebook is going to do, technically it should have more legs, but it's going to be market dependent, and this week it's binary. So I'm tempted to stay long just because my personal preference on the market is that the move is up unless something happens. And I'm not sure the bears have enough of them. I forget why I did this box here, but I'm sure in the prior video I may have explained it. So this was a little hiccup. They recovered and then some. So fundamentally speaking, Facebook is not expensive. It sells at last time I checked, in the 20s, low 20s, I want to say, price to earnings ratio. And it is a monster, 26, 27. So still cheap. I think this is cheaper than Google. It's more expensive than Apple, but it's 5 times cheaper than Amazon, just to give you a quick reference, not like for like. But there is no like for Facebook. Pun intended, unintended actually, but it's got over 1 billion users active every day globally. And the US is only a sliver of it. Nobody overseas cares about this privacy bunk. It's all focused in the US. Yeah, most advertisers are here in the US, but really, if you think that the eyeballs are the money, they're not here in the US. So anyway, my 2 cents on it. Nick signing out.